Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
Moody's Investors Service has signaled that its confidence is wavering ahead of a potential U.S. government shutdown. We get more from Bloomberg's Kaylee Lyons.
They say that a shutdown would underscore the weakness of U.S. institutional governance and strength. The statement goes on to say it would demonstrate the significant constraint that intensifying political polarization continues to put on U.S. fiscal policymaking. And the reason this might sound so familiar is it was just back in August when Fitch downgraded the U.S. credit rating because of governance issues and political dysfunction.
Bloomberg's Kaylee Lyons reporting Moody stopped short of threatening a downgrade, but it did use unusually blunt language in expressing concerns over the looming shutdown. Moody's latest report, which leaves its U.S. rating unchanged, is a sign that debt sustainability and the politics surrounding it will continue to be a theme through the remainder of the year.
We heard from the CEO of Goldman Sachs today, David Solomon. He was saying it would be unprecedented for the economy to go through this type of Fed tightening without a slowdown in growth. Here he is speaking earlier at the American Energy Security Summit in Oklahoma City.
I think it's going to be hard to get inflation back to the target. And that probably means if inflation is sticky, we will see additional interest rate increases. And ultimately, that probably does lead to a little bit more of a slowdown in the economy. Whether that's a recession or it's just a slowdown, it's hard to say.
That is David Solomon, the CEO of Goldman Sachs. You'll remember last week, two Fed officials saying at least one more rate hike is possible as the Fed looks to get inflation back to that 2% target. And today, the head of the Chicago Fed, Austin Goolsbee, was saying it's still possible for the U.S. to avoid recession. Brian?
Well, Amazon is planning to invest in an AI startup, Anthropic. It's the latest move by Amazon to become a major player in generative artificial intelligence. Here's Bloomberg's Alex Webb.
Amazon has very much been seen as a laggard in this space. Google obviously got strong AI chops. Google Bard is their forward-facing chat model. And so this potentially beefs up their capabilities in that space, which helps them when it comes to the battle for the cloud.
Bloomberg's Alex Webb. And Amazon stock traded up 1.7%. Amazon is committing $1.25 billion for the initial investment for a minority position in the startup. The final investment could reach $4 billion. As part of the deal, Anthropic will move most of its software to Amazon Web Services data centers. It will also use Amazon's chips to train AI models used to power chatbots and other applications.
Well, Ford Motor is halting construction on a battery plant in Michigan worth $3.5 billion. We have the story from Bloomberg's Denise Pellegrini.
The plant drew scrutiny from Republican lawmakers for its ties to a Chinese battery maker. The plan was to license technology from China's contemporary Amperex technology, but some lawmakers accused the company of being affiliated with the Chinese Communist Party. A Ford spokesperson now saying the company is pausing work and limiting spending on construction for now. It's not clear if the political pressure is the reason for the halt. Ford is also throttling back on ambitious electric vehicle production plans as sales growth slows. This plant would have employed 2,500 workers and produced enough batteries to power 400,000 electric vehicles a year. Denise Pellegrini, Bloomberg Radio.
Well, China and the EU have reached a slew of agreements in areas including macroeconomic policy as well as supply chain cooperation. However, China's Vice Premier He Lifeng expressed strong concern and dissatisfaction over the EU anti-subsidy probe into Chinese electric vehicles. The Vice Premier made these comments yesterday after meeting with the European Union's chief trade negotiator, Valdis Dombrovskis.
We hope that the EU would exercise caution and to continue to keep its market free and open. This benefits European consumers, benefits green and low-carbon development of Europe, and benefits global climate change cooperation.
Chinese Vice Premier He Lifeng. Earlier yesterday, Dombrovskis warned China that the EU would be more forceful in upholding fair competition and defending its interests against the country. He, or rather He, said that China is hoping that the EU would cancel the export restrictions on high-tech goods. The EU launched an anti-subsidy probe into Chinese EVs earlier this month, and China's Commerce Ministry has criticized the investigation as a, quote, naked act of protectionism.
The Chinese property developer Evergrande has failed to repay an onshore bond. We have that story from Bloomberg's Joanne Wong in Hong Kong.
Evergrande subsidiary Hengda Real Estate defaulted on $547 million in principal plus interest. The onshore bond was due September 25th. In March, Hengda missed an interest payment on the bond, which was issued back in 2020. Hengda said it would actively negotiate with bondholders to find a solution. Meanwhile, Caixin reported that two former Evergrande executives had been detained by Chinese authorities. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
I'm Ryan Curtis, along with Doug Krisner. You know, China Today put this nicely on the Evergrande story. Evergrande rises from the graveyard to haunt markets. Halloween's still a month away, but a renewed crisis at Evergrande has started to scare investors again. And also, Doug, I wanted to revisit that EU-China story again, because although we mentioned this at the beginning, that the Ministry of Commerce put out a statement saying that they had a lot of cooperation. The comments from He Feng were pretty sharply critical. And it's interesting that the latest batch of information we got was from the Ministry of Commerce putting a positive spin on it, saying the EU reached a slew of agreements in areas of macroeconomic policy coordination and supply chain cooperation. So I wonder whether or not those comments from He Feng were deemed as kind of harsh, and they wanted to kind of step in and say, okay, that said, we did have some cooperation. So that's something we can put to our guests later.
Certainly a complicated relationship when you talk about de-risking versus decoupling, right? And before you go, Brian, I want to draw your attention. I don't know whether you saw this Fed study today warning on some weakness in the U.S. consumer. This study claims all but the richest 20% have run out of excess pandemic savings. And at the same time today, Mike Wilson was warning about some of the consumer stocks. He is citing a slowdown in consumer spending. He's also looking at the issue of student loan repayments, rising delinquencies where credit cards are concerned, higher gas prices, and some weak data that we've seen in the housing market as well.
Yeah, it is absolutely a concern. And we have noted for a while that consumers have been spending a lot on their credit cards, and with rates this high. And of course, you know, if you don't pay off those credit card bills, the rates are stratospheric. But one other quick comment on the Amazon investment. I know that you worked on this story a little bit too. One of the things I think is interesting about it is that in the past, AWS has focused more on developers rather than consumers. So this might mark a change in that, in trying to bring AI more to the consumer side of the equation. So something we can also explore later in the program. Now it's time for Global News. All right, let's get the latest on world news now with Ed Baxter in San Francisco. He is in the 960 newsroom looking at all the top stories. And I imagine right up there near the top would be President Biden tomorrow showing up on the picket line.
Yeah, absolutely, Brian. And we'll get there in just a second. But when lawmakers get back tomorrow, they'll have a very short window to avert a government shutdown. They now will have to work on a continuing resolution. Bloomberg's Kayleigh Lyons says it's the only way to get anything done.
The mechanism of doing so is going to have to be a continuing resolution. They simply don't have time to pass all 12 appropriation bills they would need to. How long that continuing resolution is, though, in the House, and whether it can get adequate support in the Republican Party, considering Speaker McCarthy can only afford to lose 4 votes, is an open question. Granted, the Senate also is working on its own CR through the mechanism of the FAA reauthorization bill. That is something Majority Leader Chuck Schumer is going to try to be working on this week.
And Bloomberg's Laura Davison says this could last a while.
Sources really are saying that this is going to be, that Republicans are very much dug in on this. So we're looking at weeks, potentially more. The whole idea of going into a shutdown, what hardliners will tell you, they want to extract some sort of concessions from Democrats. They want to hold out as long and try to win things over.
And Laura reports that the side that causes a shutdown rarely gets any political gain out of it. And for Kevin McCarthy,
why would they want to stop paying the troops or stop paying the border agents or the Coast Guard?
Yeah, 5 days and counting. Philippines has removed China's floating barrier in the South China Sea just hours after condemning it. Coast Guard says it was at the order of President Ferdinand Marcos Jr. And the UAW strike expands. President Biden will be in Michigan tomorrow, and White House is stepping further into the fray. Spokeswoman Karine Jean-Pierre.
This is the president that's made very, very clear that he believes that corporate profits should lead to a record UAW contract.
Jean-Pierre says the president has made it very clear he believes corporate profits should lead to UAW, a record contract. And Donald Trump goes to Michigan on Wednesday. With a tentative agreement of the Hollywood writer studio strike, the process begins in getting things back to work. But Stephen Wolf Pereira, business officer at 3 Pass Studios, says it will not begin immediately.
The reality is they need to get back to work. So we're glad that we have a tentative agreement. It needs now to go to the guild members, and hopefully on Tuesday they will vote and ratify this. But it's still going to be some time before folks get back to work. And
WGA picket lines are down. The United States President Joe Biden has met with leaders from the Pacific Islands as the U.S. tries to compete against China's influence in the region.
We hear your calls for reassurance that you never will lose your statehood or membership of the UN as a result of a climate crisis. Today, the United States is making it clear that this is our position as well.
And he directly addressed the issue of rising sea levels, said the U.S. hears the concerns. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. In San Francisco, I'm Ed Baxter, and this is Bloomberg.
This is Bloomberg Daybreak Asia. I'm Brian Curtis, along with Vonnie Quinn, and our guest is Sylvia Jablonski, co-founder, CEO, and CIO at Defiance ETFs. Sylvia, a point-blank question here. Are yields rising because of concerns about inflation or confidence in growth?
Hi, Brian. Great to talk to you today. I think that a lot of this is, I think a lot of this is just kind of fears of growth, fears of inflation, and, just a lot of uncertainty there. We saw the 10-year yield climb 11 basis points to above 4.54%. And we haven't seen that in well over a decade. So, just fresh signs of uncertainty and turmoil here in rates.
So, Sylvia, give us an idea of what you expect will happen growth-wise.
So, I think what will happen in terms of growth is very much dependent on the path that the Fed takes, right? So if we get that one more rate hike and then we get into next year and we have a clear picture of what the Fed plans to do now, and that's essentially, 2 less rate cuts than were projected before, and we sort of stick to that, then I think we know where we're at, and it feels tangible to achieve that soft landing with slower growth. However, if inflation, kind of spooks us and goes the other way, and price of oil and gas remains high, perhaps you have some hotter than expected reads, and the Fed is sort of forced to do additional rate hikes and perhaps no cuts next year. I do think that puts us into a situation where we would be worried about growth. The growth this year has been unexpected and, far more positive than was thought by the markets. You had that over 2% last quarter, 2% the quarter before. The consumer's holding up, spending has held up. Corporate earnings are sort of great, and that's all in the face of these headwinds of high inflation and high rates. So if that sort of gets worse, I do think things will start to crack.
And does that, given all your views, does that make the 10-year yield at a little over 4.5% very attractive, and in fact maybe even more attractive at the longer end rather than in the belly of the curve?
Yeah, again, I think what really will matter to the market is essentially, what happens with the Fed and what happens with rates. I'm not necessarily paying attention. Not much change today. So that move in the yield was a little bit surprising to me. I don't think that, there was any kind of major news that necessarily prompted that. So I think, it'll be really interesting just to see what the Fed does, what happens with inflation into the next couple of months, what happens sort of with corporate earnings and then what the bottom line impact will be.
Sure, but if you need to preserve cash or make some money between now and then, you can't really afford to wait. So what would the betting be here? I noticed today hedge funds are cutting leverage at the fastest pace since the 2020 crash.
Yeah, so it depends on, the sort of the position that you're in, I suppose. On one hand, there are still great ways to generate short-term yield and income, right? You have these short-term treasury products still at the 4 to 5% range. So, sure, you could sort of scoop those up in the short term. And then, if you're a longer-term investor, though, I think the recent pullback, the market essentially rallied, right, from the end of July. And, we got to a point where there was a lot of kind of fear of missing out. But then, the logic there was like, well, now valuations are sort of too high. How much higher than, can we go? What's the good news on the horizon? And the good news on the horizon could be that, the market has pulled back in those, August and September doldrums. So if you're kind of a dollar cost averager and you don't need to raise cash in the next 3 months, these are good entry points because, sort of regardless what happens in the near term, inflation is coming down, right, systematically, maybe not, kind of like in a perfect straight line in the next couple of months, but inflation is coming down. The Fed will come, to a halt here. And at some point that bodes well for the market and particularly, growth stocks. And again, they've had a great run, but some of them are now down, 10% in the last couple of months. So there are opportunities there. Short term, sure, you can stay in these cash-like products that yield 4 to 5%, but longer term, scooping up equities tends to win the race.
If I could direct the conversation around to China and Asia more generally, a lot of guests on this program do raise politics and policy as one of the reasons that they're a little nervous about China. Normally, politics doesn't affect stock prices too much. In your view, is it worth looking at China, or would you sort of be hands off for a while?
Yeah, I mean, I think, and again, it kind of depends on what kind of investor you are, right? I think if you're looking out to the longer term, 2, 3, 4 years out, then there are great opportunities now to scoop up emerging market stocks because, they just haven't done what the market expected them to do this year. U.S. rates remained high. China's seeing weakness in growth and demand and things like this. But again, I do think that these things tend to eventually come around. I wouldn't expect to see much performance. I probably, wouldn't dip in if I had a shorter investment time frame, say, next 6 to 12 months or so in the region. But longer term, I do think that you're looking at something that will be discounted, when you look back 2 or 3 years from now. So a lot of this will depend, again, on stability in the U.S. dollar, price of oil and gas, sort of what the Fed does and just the cross politics between China and the U.S. on parts and production manufacturing. I do think that matters. Again, second largest economy, is a huge consumer of U.S. goods and travel and things like this. I mean, if things fall to the wayside, I do think that that sits on both economies' growth.
Sylvia, you said the EV trade is where the puck is going. China or out of China?
Well, I think both there. Again, some of this will impact consumer spending, but if you look at the top names in the U.S., which are Tesla and Rivian, and you look at the top 3 names in China, you're seeing an increase in deliveries. You're seeing an increase in profitability margins. They're starting to account for larger percentages of sales. So in China, about 60% of new cars sold are electric vehicles, and in the U.S., we sort of know the Tesla Elon Musk story, the owner of the EV trade. But, this is just something that's sitting at about 18% globally or projected to by the end of the year. It's between 14 and 18 now, to 30% in the next 5 to 10 years. So you're talking about, a multi, hundreds of billions of dollars turning into 2.7 trillion by 2040. So this is a longer term innovation trade.
All right, Sylvia, thanks so much for joining us. Sylvia Jablonski, co-founder, CEO, and CIO at Defiance ETFs. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.